Hello, hello, hello. So today I'm going to be showing you my investing journey, a very brief overlook of some of the lessons that I learned so that hopefully you can learn from them and make sure that you don't make the same mistakes. The Dunning-Kruger effect is an effect that can be seen in almost every field in the world. Every aspect of life, you can apply this effect. So, what does it mean? It means that when you first start off doing something, or you just started learning something, you don't know much about the topic at hand, you don't know much about the field, but somehow your confidence is super high. You feel like, oh, I can do this. I'm gonna be very good at this. This is not as hard as I thought, and this is the peak. And this is usually when uh, something bad happens, and you realize, oh, I wasn't that good. And then suddenly you're all the way down here. You learn more about the field, you learn more about the topic, and you suddenly feel, oh, I'm maybe not as good as I thought in this field. And over time, as you stick with it, you slowly gain back your confidence. And as you continue, this can take a very, very long time. And over time, you will end up becoming an expert in your field because of the time and effort that you spent learning and growing from your mistakes. So I feel like my investing journey was really a classic one that started off with a very high peak and then just fell immediately afterwards. So as soon as I tell you the dates that I entered, it's going to make a lot of sense. So when I first started, it was November of 2020. This is when I first opened my brokerage account in Chase, and I deposited my first couple of $1,000s. And that grew eventually to 6,000 to 10,000, and I was feeling really good about what I was doing. I was at the peak. So I was putting in money consistently and just investing in anything that I saw on the internet. So one thing that I was investing in was the ARK funds from Kathy Wood. And we know how that goes, right? I didn't do any research. I was just investing, seeing, oh, this looks pretty nice. This looks like it has a lot of potential, and just putting my money there. And eventually, we reached the peak, which was around 2021 from my memory. And I was like, man, I'm a genius. This is easy. I was making so much money on Tesla, on the ARK funds. Everything that I was putting money in was just printing money. And I was like, hey, this is pretty easy. Like, I don't know what's so hard about this. And a few months pass and I'm down 10%. I'm like, okay, things are just cooling off, It's not that bad. And then another 10%. And then slowly and surely we get down to a very bad spot and a bear market hits. So this is when we get into end of 2021 to 2022. I'd say from my memory, 2022 to 2023 was about the worst of it, because this was the time when every day that I checked my portfolio, my brokerage account, I was down $100, $200, $500, and my few tens of thousands in my portfolio was just getting eroded every single day that I checked. And as a college student, this was really painful. Looking back, it wasn't as much money that I was down. I was only down about total 3 to 4K. And it was mostly unrealized losses at the time. But I remember just seeing that number continue to increase towards the downside. And it was so crushing for me because I had come into investing thinking that I knew everything. I had the Midas touch or something. I was just putting money in and seeing it grow. And just a few months later, I was seeing everything crumble before my eyes. So because of that, I started taking a step back and reassessing what I was exactly doing. And at that point, I started to slow down my investing. I started to put cash into cash equivalents like the I bond that was very popular in 2022. That was a maximum of $10,000, and it basically matched inflation, which was around 9% at the time. So I put money there. I put it a bunch into treasury bills, stuff like that. And I was like, this investing stuff is pretty hard. I'm just gonna put everything in cash and just let it ride. And during this time, I was also looking at alternative investments like this is when I discovered JEPQ, those covered call ETFs that generated consistent income and were performing better in these bear markets. So that's also something that I kind of gravitated towards because of my aversion to risk. I had been burned, so I decided to stay away from growth. Now, looking back, if I had the knowledge that I have now, obviously I'd be looking at the dips and I'd be seeing, ooh, we got to look for some opportunities for some quality companies. Looking back, there were so many companies that were down big, like Meta and other big tech. In general, big tech was a really good buy, and other companies. So obviously, this was over the course of about 4 years, and I had experienced a really high in 2020 and 2021, and then just years of consistent bear market into 2022, 2023. So it was a lot of pain, and I didn't know if investing was for me. But even with all the equity prices dropping, crypto was dropping, I got into that a little bit as well and was burned by that, of course. And throughout that, I was always learning, just continuing to do research. And even though my confidence was low, I was still wanting to learn more. And eventually, we go into 2023, which I'd say is around here on the graph, slowly building up my confidence again, finding which investments worked for me, what kind of balance I wanted in my portfolio, what kind of expectations I had for the market, and just understanding market moves in general really helped me build my confidence and also my portfolio throughout the years. So eventually, I started selling out of these losing companies that really were bad purchases in the beginning. So I started rebalancing my portfolio, going towards quality companies, buying into index funds and the covered call ETFs to help me generate some income and also stabilize my portfolio. So now we're into 2024, and I wouldn't say I'm an expert yet, but we'll see. Maybe in a few more years with some track record behind me and some more consistent wins, I think that overall, anybody can go through this. Anybody can experience the Dunning-Kruger effect, no matter what field you're in. We're talking about investing, but throughout your life, you have to identify these phenomenons that affect your psychology and also affect the outcome of your actions. So if you can identify this, then you can dig deeper and see what went wrong, what went right, how do I improve on this? And yeah, in the end, I believe all of these experiences and the whole journey from ignorance to becoming more knowledgeable, it was all necessary in shaping the investor that I became today. If you guys learned something from this video, please leave a thumbs up and a comment and subscribe, and I'll see you guys next time. Bye.